Hey guys, Mubarak here of Penny Stock. Hope you're doing well. In this episode, I want to talk about Lyft stock versus Uber stock. All right, and I'm going to talk about how you guys should view them, whether they're an interesting investment, and kind of my general analysis on them. All right, because they're the two big ride sharing apps. They're the two big behemoths in the industry and in the space. So I want to kind of use this as a teaching lesson for you guys to be able to absorb how you should look at competing companies, what people do right and what people do wrong. So let's get right into it. The major thing people do wrong right away with actually all stocks that I want to talk about is they think that the stock price itself determines the value of the company, right? And you might be thinking, well, Mubarak, what are you talking about, right? That's obviously what it means because when I multiply the stock price by the amount of shares, I get the total market capitalization, right? And so, yeah, in that fashion, you're correct. But just because Lyft's stock price right now is higher than Uber's stock price, that has nothing to do with whether or not the actual value is higher. Because again, think about the equation I just said. It's stock price multiplied by the number of shares outstanding, right? So I don't want to get too mathy here, too nerdy here. I try to make stocks as easy as possible so people don't get intimidated because, Wall Street already spends enough billions of dollars trying to make it more complicated than it needs to be. But that number of shares outstanding, unfortunately, that's just a super arbitrary number. Companies make it whatever they want and they're able to change it whenever they want as well. So when a company buys back their stock, or really that's not exactly it because it's still afloat, but they have the ability to create more shares just by having a board meeting, and they also have the ability to restrict shares. So you have to really be careful when you're thinking about that, right? So just right off the bat, at the time of this recording, Lyft stock is around $45. Uber stock price is around $30. And so that doesn't mean that Lyft is better than Uber or vice versa. So what I like to do is I like to go into the charts and see kind of what's happened, right? So looking at Lyft, seeing that, Friday, March 29th of 2019, it started at almost $80, right? It came to market at about $78, and today it's trading at about half of that at 45. So already that's kind of weak for me. Talking about going long, that's not a stock that I would be interested in going long about. Even when I look at the 1 month, you know, what I like to do is when you're doing stock analysis, especially when you're looking at day trading, you want to just look at the stock price chart. All right. So again, even though we're talking about Lyft and Uber, when you're looking at day trading, meaning you want to trade it within a week, within a maximum, a few weeks, then you're not really caring about the fundamentals. I don't really care about the financials of Lyft and Uber if I want to be in and out within a week or two, right? All I'm trying to do is just take advantage of market timing, take advantage of like a quote unquote sale in the stock price and buy some so that way I can flip it at a profit. That's what you do when you're day trading. And so you have to make sure that, listening to this episode, I'm going to be talking in a stance of day trading and flipping stocks rather than doing a long-term hold, right? This isn't the Warren Buffett advice where you just buy something and then just wait 50 years. You can still do that with these companies, but if you want to do that, you want to do the fundamental analysis. Okay. The fundamental analysis part is where you're going to go in and you're going to look at the annual report of the company. You're going to analyze the financials. You're going to look at the management team. You're going to look at the industry. And that's what Wall Street spends all day doing, right? But for day trading, you have to look at just the price variations on a day to day and where you can really profit. Okay, so for example, looking at this in just even the 5 day, there was a large drop on December 23rd where it went from $48 to $45. Now, usually that has to do with some sort of news. And so what I like to do is there's this really cool free website resource called finviz.com. Also at inpennystock.com/stocks, we also have a free stock screening software that allows you to really do some great research on stocks. So either one you can use. Eventually, we're going to make the in penny stock screener much more intricate. But right now, FinViz is pretty good because what they have is a really cool feature where you can type in any stock, look at their chart, but then you can also see all the news related to it. And sometimes you can also see what news impacted the stock price and when. So if I look at, the thing is these stocks, they have news coming out every day. That's kind of the issue with some of the blue chip stocks is you don't necessarily know what's going to impact it because so many people are covering it, right? When you look at penny stocks or you look at the stocks that the multi-billion dollar hedge funds of Wall Street aren't trading, you get the advantage of having, I wouldn't say liquidity, but you don't have to compete with those types of people, right? They have billion-dollar softwares and algorithmic trading and high frequency trading that they use. But that's why I like doing penny stocks because I'm trading stocks that they don't care about, right? So those penny stocks trade on the OTC markets, the pink sheets, and because of the fact that their value is so low, the hedge funds aren't even able to participate in those stocks because their investors and the people who gave the money to them in the first place don't want them trading those quote unquote cheap stocks. But that's good because that allows us to profit. So, what you have to do with these bigger stocks is really look at the short term technical analysis. And then finally, I would recommend just taking a look at, what analysts are giving to it, right? Because it's all hype, unfortunately. The stock price of a company is changing on a day-to-day basis drastically. And unfortunately, in reality, the same thing is going on in the company, right? The smart CEOs of these companies aren't changing their decisions at all. And honestly, probably besides looking at their own financial wealth, they're not even caring about the stock price because that has nothing to do with what's going on a day to day. All it has to do is the buy and sell and the market demand of the stock market. So, there was actually a price target cut of Lyft. Anytime you see a price target cut, that's usually bad news because what that means is that the analysts that are reviewing and analyzing the companies have lost faith in the long-term viability of the stock. So Piper Jaffray, which is actually a major hedge fund, recently reduced their price target from $79 to $60. And this was just yesterday on December 7th. So in that case, you would see that it's actually a reduction in the really possibility of where Lyft can go. So those are the two major keys I would look at when comparing stocks like Lyft and Uber. If you do have any other questions, I always recommend you reach out to us at admin, that's ADMIN, at inpennystock.com. And if you have any other recommendations as well for podcast episodes, content videos, just always feel free to reach out to me and we'll get that done ASAP. So hope you guys enjoyed this and I'll see you guys next time. Take care.